Hey, what's going on, guys? And welcome to the seventh investing week of the year. It is Monday, and we are diving into a new week of investing. There's a lot of stuff going on this week. So, first, we'll check out our YouTube channel tracker, then go over some stuff that's going on in the market. All right, guys. So, the key aspects of this channel are happiness, health, and wealth. So, we have our tracker to kind of track those as best we can. So on this blue line here, we're starting with today's date. It is February 13th of 2023. My weight, we did find the scale. It was hidden in my son's room. So I weighed myself. I'm at 284.9. Did put on a little weight on vacation, it turns out. So that's something that we got to catch up to. I've been in the gym a lot though, so I think we'll get that back pretty quick. That brings my total weight loss for the year currently at 13.8 pounds. Now, my investment balance. This account is currently at $1,907.56. We have been putting $50 into a new investing account every Monday through Friday, starting at the beginning of the year. So, good to see a good balance. I am so excited for us to have a balance over $2,000. It's just a really strong milestone. Um, but we got a bit of a balance. So that's pretty good. Total dividends earned in this portfolio, we have been paid $4.92. That's actually pretty good. And we have some more dividends coming in the next couple days. So that's great. Total growth, we are down $6.83 from the start of this portfolio. Now, remember when this portfolio started, scroll all the way to the top, we did start this with a negative balance of negative $30.38. So technically, we're actually up like $24. Eventually, we'll get to the days where that doesn't matter. YouTube income, that is a big zero. That is okay. That is not supposed to happen soon. So no disappointment there. Total subscribers, thank you guys for subscribing. I really appreciate it. Hope you like the channel and you find this all motivating. But we are at 1,255 subscribers. With getting monetized to earn YouTube income, we have to be over 1,000 subscribers. So we've done a great job at crushing that out of the park. It's just the watch hours. We need to get those over 4,000. So that's kind of the grind. Total views and total watch hours. YouTube did say their tracking mechanism for this is currently down. So it shows 55,649 for total views. And then my watch hours are currently 1,322.6. Again, YouTube did say that they had an issue today where they couldn't actually process this. So I don't know how out of date that is, but it's not up to date. And I feel like that happens a lot with YouTube. I'm new to the platform, so I'm not a pro by any means, but I feel like that happens. Like it happened 2 weeks ago here. So I don't know. We'll see if maybe if I'm just not big enough for it to care about tracking, considering I'm not monetized. But basically, that's the tracker. Next, let's get into the investment. All right. So first things first, I did just want to jump into SoFi. I want to show a couple things in here before we dive into seeking alpha. For one, I do have our year to date increase. So year to date, we're up 1.28%. So it's a little easier to see that when we're not starting from like negative $30. But yeah, we're up $24 on the year so far, which is great. But I wanted to come down here and talk about one of the wins of what's called dollar cost averaging. So, as you may or may not know, we do between $5 to $10 every single day into a couple different stocks or funds. You can see these scheduled transactions for $5 into Pepsi, $10 into SCHD, $5 into JEPI. So, what is the benefit of that? And I wanted to take a look at Pepsi because Pepsi right now is a really, really good example of that. You can see here, pretty good day for Pepsi. They're up 0.89%. I thought they had some really good ads in the Super Bowl and yada yada. But I want to look at a 3-month chart. And let's find the date that we started this thing. Okay, so January 3rd would have been the first day of trading um, of the year. Okay, so on January 3rd, Pepsi was at $1.79, or sorry, $1.79, $179.41. All right, that was the price then. The price now is $177.77. I can't keep saying everything's a dollar. So it's down. All right. Pepsi has come down. Now it's retracing up. So, maybe it will probably go up a little bit more, I hope. But Pepsi as a whole, year to date, is down. Now, if I come over to this side, right, where it says my investments, you can see that my total value is $158.44, right? My shares owned, we're almost at zero point 0.9 shares, but my average cost was $173.91. So I've actually made $3.44, even though the price of Pepsi's gone down by about $2. So even in that time, Pepsi's come down as a whole, I'm actually up 2.2% on our position. How does that happen, right? By buying in every single day, it takes away a lot of the volatility. So, like the up and down action of the stock. So, yes, I bought it for $179.41. But the next day, I bought it for 178. Then it was 177. And then it bumped up to 181 and then 179. So as that keeps going, yes, did I buy it at the highest that it was? Absolutely. But did I score some Pepsi shares for $169? Yeah. So January 19th, 20th, 23rd, 24th, it popped up a little bit. Then it dipped back down to that 169 for a while. So I was able to buy all these shares every day when it was inexpensive, which helped balance out the days that it was more expensive. So kind of cool just firsthand. This is a really good demonstration here on dollar cost averaging into a dividend paying stock. All right. So with that, we're going to look at Seeking Alpha. All right, guys. So just taking a look at our portfolio here in Seeking Alpha, I have everything here sorted by value. So we're going to take a look at which stocks or ETFs are doing the best and which are, well, doing the best at growing their dividend yield. So let's start with ticker symbol O, which is Realty Income Corporation. We currently have a $314.61 balance here, with 4.69 shares. So great. We're up 5.39%. Good growth on that. We have a dividend payout coming in the next couple days. So we'll have that in the account by the end of the month. They are definitely leading the charge, which is why it is one of the items in my portfolio that I did want to put $10 a day instead of $5 a day that the market's open. Just because, again, I believe in realty income. I'm not a wealth manager, credit counselor, financial advisor. It's just something that I personally like. Please do your own research. And then right behind that, we have SCHD. This is Charles Schwab's U.S. Dividend Equity ETF. Trailing it by about 50 cents. So we've got $313.97 in that, 4.04 shares. Price has bumped up to $77.65. Again, decent performance from SCHD. This is really my solid S&P 500 tracker. So, this is something that, again, $10 every day the market's open instead of $5. It's a good long-term Pretty solid, stable item to have in a portfolio. But next, this is one that we are not doing the daily investment into. This is just to watch it. We want to monitor it, see what it does. This is JEPQ. There is a very popular fund, which is also in our portfolio, called JEPI. This is its cousin. It's JP Morgan NASDAQ Equity Premium Income ETF. I'm going to do a video this week about what JEPI actually does, what JEPQ actually does, and how they work. This is designed to pay you out a monthly dividend every month. That is its purpose. And it's actually growing a little bit on top of that. You'll notice that we have been paid so far 1% of the account in dividends. We had 5 shares at the beginning of the month. We were paid 0.05 shares worth of JEPQ. We also are up 5% year to date. So good growth, a little bit of growth in our holding. Love it. Now, back to the stocks that we are investing in on a daily basis while the market's open. We have Pepsi leading the charge. I know I seem kind of pro Pepsi lately. It's because I am. Pepsi's been doing a great job at not only growing as a company, but they're also doing an excellent job of growing their dividend. It's like every couple weeks there's more news on Pepsi that makes me more gung-ho about it. The past couple days they announced that in June they're going to be increasing their dividend by 10%. Little things like that is stellar. Yeah, so that's why I'm a little excited about Pepsi lately. Plus, Starry Soda is actually pretty good. Anywho, we have almost a full share. Like, I just want a full share of Pepsi. I'd feel so much better about myself. It's we have $158.44 invested in Pepsi. That's 0.89 shares. Right now, Pepsi's at $177.77. We just went over that a minute ago. We have so far invested $155. That's our cost to get into these categories. So $155 is what we've put in. Again, dollar cost averaging for the win here. Year to date, Pepsi's down a chunk. All right. Now, there's a little bit of after hours trading on the SoFi account, which is why it looks a little different here. But year to date performance down 2.5%, but we are up 2.5%. And we haven't been paid any dividends yet. So great news there. That thing is just moving right along. JEPI, right? JEPI, which is JP Morgan's equity premium income ETF, just like JEPQ, it exists to pay you a monthly salary. Has been doing just that. I mean, we have a $156.11 invested in JEPI. All right. That's for 2.84 shares. The price is at $55.06. So far, we have been paid out about $1 from JEPI, which is kind of cool to see. With a little bit of market fluctuation up and down, we haven't seen too much price movement on JEPI, but that dividend is what got us to this profitable area. Remember, we invested $155 so far. They paid us a little over $1 in dividend payouts. So that bumps us into profit territory as opposed to break even territory. So it's kind of fun, kind of cool to see. And we'll get another payment from that next month. BlackRock, we're just under that break-even point, $154.08 for 0.21 shares. This is one of those big ones. It's $736.91 a share, but this dividend yield is looking better and better every day. Anytime that BlackRock comes down a little bit, this dividend yield goes up, because the payment that we're getting from the dividend on BlackRock is staying the same, right? It's that $20 a year. So it just means it gets a little cheaper to buy that $20 every time that the stock goes down. So I'm perfectly fine with that. there's been a lot of big swings on BlackRock in the past like month or so. You can see BlackRock is actually up $2.10. I am down a, or sorry, it's up 2.1%. I'm just at about a break even on it. So where this went up a little bit and I'm about even on it, that's where dollar cost averaging can work against you in a way, at least in the trajectory that BlackRock has been for the past month. Keep in mind, guys, this is a long haul assignment. This is a 10-year assignment. This is not, we're going to look at 1 month and then give up. All right. Um, but yeah, good growth. Excited to get some payments on this next month. That'll be good. AT&T, ticker symbol T. We have 7.98 shares for a total of $153.72 in that stock. The price has come down on this in the past week or so. It was up in like the $22 category. Then it kind of hovered around like the $20 category or price target. Now we're in the teens. That dividend is still looking mighty good, which is nice. And we got a little bit of dividend juice this month from AT&T at the beginning of the month, but still up over for the year. This has been kind of all over the place. Like we put it in the portfolio, it's been bouncing around. I think it will stable out. It's just if you look at let's just pull this up. If we look at the year-to-date chart, there's a lot of like big spikes here. Us buying it every day in this $20 price range is what's taking us out of contention. But I do think it should level up sooner rather than later. If you look at the 1 year chart, I mean, it's been spiking up and down a lot. So I still feel very good about dollar cost averaging into this. Their dividend is good and, I like it. Anywho, getting to the last couple of them. MPW. All right. This is Medical Properties Trust. You want to see a chart that's all over the place. This is definitely it. But just going back to here, MPW, we are at $151.28. We're down almost $4, which is about 3%. We do have 12.3 shares of it, though, which is exciting, even though the share price has settled sort of around $12.30. That dividend yield is pushing 10%, which is awesome. I'm looking forward to some big dividend payouts on that eventually. But as of right now, we're just building our position in that. And, year to date, it is still up. So we do still have good growth on this. And I'll take the shares at MPW for as cheap as I can for as long as I can, because I actually do think this should do pretty well. This is not a standard like investment choice. It's not a dividend aristocrat. It's not a something with a huge, great proven track record, but I just like the value of it. So I'm just buying and buying. Procter and Gamble, okay, PG. This is the stock that we want to tank, right? I'm going to put BlackRock in that category and Pepsi in that category too. But if there was a stock in this portfolio to just be plummeting, it is Procter and Gamble. So, we're down more than $5 on this position. So we're $149.51. We have over a share now. We're 1.07 shares. And this thing, again, it's just coming down. And every day it feels like that it comes down. This dividend yield goes up. We're getting this $3.65 per share. We're buying it cheaper and cheaper every day. I mean, you can see here year to date, it's down 8.78%. That's a lot of money. I mean, that's a lot. Market average for something to go up or down is like 8% a year. So this is doing it in like a month and a half. That's craziness. So, this is its chart. It's dropping. and dropping quickly. So good thing is we didn't have that many days at the beginning of the year where we were buying it in the 150 range. We mostly bought it in like the 142, 141 range. So, really good value there. Love to see the cheap prices on Procter and Gamble. And then the last item that we have in the portfolio is Nasdaq. Um, this is one that was in the portfolio before we set this up. It was just sitting in there. We have 2.31 shares. We are waiting on a dividend payout of 20 cents per share to come out at the end of March. We're still trying to decide what we're going to do about the NASDAQ shares. I might just pump them all into JEPQ just for the fun of it, but we're not quite sure. There are a couple other stocks and funds that I'm looking at replacing NASDAQ with, and maybe putting $5 a day into as well. But we will take that with stride. But that's basically what the portfolio is looking like right now. All right, so I want to talk about stuff going on this week that could very much affect the stock market. First is tomorrow's inflation report. All right, so the inflation report tomorrow is going to have pretty much one of two outcomes. Basically, they think that inflation has gone up just a tad, and everyone's kind of expecting that. Maybe it's the same, maybe it's 0.1% less. If it's 0.1% less, if it's the same or 0.1% more, we're going to see pretty much nothing happen. At least what it looks like according to a bunch of analysts and stuff. Now, one thing that a few analysts are saying is they think that the inflation is going to be more than 0.1% higher. If this is the case, we could see some pretty big declines in the market tomorrow or over the next couple days. The reason that they think that the inflation might post a higher number than 0.1% is because the cost of groceries is still climbing. The price of gas and energy is also going up very, very quickly. Shelter costs are continuing to increase, and these are like the core things that people need. So even though some things might be cooling off, like retail wise or whatever, if it costs more money to live and the utility costs are higher, that's not great for the general population and their spending. That also means that you're probably looking at another bigger Federal Reserve rate hike. Now, people often talk about the Federal Reserve saying, "Yeah, we don't look too much into these. You can't look month by month," and there's a lot of conversation there. But if we see not a spike in inflation, but a reverse where inflation starts really like significantly going back up again, it just could cause them to be a little more aggressive in the interest rate hikes. And companies want to plan ahead for that. So companies with a lot of debt, lenders and things of that nature, you might see them pull back a little bit on on news tomorrow. So hopefully, no more inflation. There's certain grocery stores that I can't even go to anymore because you walk in for like, a gallon of milk and a thing of eggs, and you walk out, it's $23. Like it's insane. So, I clearly don't want any more of that, but I also, the rates need to come down a little bit so people can start spending money on things again. Because however many times money changes hands is important to the overall stock market. If I buy a fish from a guy and then that guy takes the money from the fish and then pays it to a bank, right, to pay off a loan, the money's not going anywhere. The bank has it now, it's done. But if I pay that fish guy, $5, and then he goes down the street and pays a street vendor for a hot dog, and then the hot dog guy goes and then, he goes to the pub after work, pays that as a tip to the waitress, and the waitress passes it on, and she goes off and buy clothes, and then the clothes get deposited to the bank. 5 people have grown their wealth off of that same $5. That's better for the economy. So we want to see more money in people's hands and less going to paying stuff off right away. Obviously it's good. Invest your money, like pay off your debts, that kind of stuff. Again, not wealth management, not financial advice, just for entertainment and all blah blah blah. But yeah, it's good for the economy when people feel like buying stuff, or they feel comfortable buying stuff. Like they're not so strapped for cash that they can't buy a loaf of bread at a certain store. But just a heads up, we're going to see that report tomorrow, on Tuesday, and yeah, hopefully it's good news. But I kind of expect a bad inflation report tomorrow. So what that means is over the next couple of days, we will be buying at a slightly cheaper price. So if inflation goes up, the one thing that is deflated is the price of our stocks, and I am okay with that. So with that, I wish you all happiness, health, and wealth. Roll the outro.